Good morning, Chairman Velasquez and members of the committee. Thank you for the opportunity to testify today. Like most of my fellow NAM members, I am a small business owner living in the same community where I work. As a member of NAM, I am required to adhere to a professional code of ethics and best lending practices. In addition to NAM requirements, mortgage brokers are regulated in all 50 states and the District of Columbia. HUD's proposed rule will make bold changes in the marketplace and my business. In light of the current market situation, rising home foreclosures, the credit crunch, and recent proposed changes to the FHA program, NAM questions the appropriateness of the timing and implementation of the proposed rule. Today's mortgage market is significantly strained and continues to experience turmoil and change. At this time, NAM believes HUD's efforts and the mortgage market in general may better be served by focusing on the market today and providing support for consumers currently at risk of losing their home to foreclosure. NAM applauds HUD's RESPA reform efforts to date. However, we believe HUD should consider delaying implementation of any new policies or procedures until the market is able to stabilize, accommodate changes, and provide assistance in the high volume of borrowers currently in need of refinancing and/or foreclosure assistance through programs administered by HUD. NAM believes HUD should continue to move forward with the RESPA reform process, focusing specifically on measures in the proposed rule that seek to protect consumers from unnecessarily high settlement costs and abusive practices and enhance transparency of the loan origination process, taking into consideration comments and suggestions received during the critical review period. NAM has long advocated for high uniform standards for all mortgage transactions, as well as the creation of minimum standards for education, criminal background checks, and a national registry for all originators. NAM objects to components of the proposed rule that would not best serve the consumer, either because they would impede competition, treat direct competitors differently, fail to reflect the most authoritative research, or do not consider the most effective and least burdensome alternatives. Despite changes in the market since 1992, such as automated underwriting systems, web-enabled credit scoring, software programs, etc., which have blurred the lines between broker and lender transactions, the proposed rule continues to promote artificial distinctions between broker and lender transactions. The proposed rule requires the disclosure of yield spread premiums, YSPs, only in broker transactions. In general, YSP represents the spread between the wholesale and retail rate of funds. This spread is not required to be disclosed in lender transactions. This artificial distinction places small business mortgage brokers at a competitive disadvantage by imposing asymmetrical disclosure obligations among originators receiving the same compensation. Exhaustive studies of the mortgage disclosures by the Federal Trade Commission, the government's principal consumer protection agency, in 2004 and again in 2007, show that additional disclosures of YSP create confusion, cause consumers to choose more expensive loans, led to a bias against broker transactions, and impeded competition, thus hurting consumers. Requiring brokers but not other originators to make such disclosures enables our competitors to steer consumers away from brokers, even if brokers offer more favorable loans. For these reasons, NAM believes the FTC should conduct a thorough analysis and field testing of any proposed GFE forms to ensure the market remains competitive and new disclosures do not lead to biases or fraudulent practices between the distribution channels. We are operating in a vastly different market where all originators act in the same capacity. Therefore, regulations must be based on function, not artificial distinctions based on license classification. Even the MBA acknowledges this shift in the market towards an originate-to-distribute model. Due to this market change, it seems clear that HUD must broaden its definition of mortgage broker to capture everyone who originates to distribute. Additionally, NAM believes that HUD has failed to adequately comply with the Regulatory Flexibility Act when promulgating its proposed rule for two reasons. First, HUD's initial regulatory flexibility analysis relies upon outdated information when estimating the economic impact of the proposed rule on small entities, including mortgage brokers. Second, HUD's IRFA does not reflect sufficient comparative analysis of less burdensome alternatives to the proposed rule, which would minimize the adverse impact on small entities. NAM looks forward to continuing to work with this committee as well as respective regulators on accomplishing solutions that are effective in helping consumers without hurting small business. Thank you, and I'd be happy to answer any questions.
Thank you.